Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. A little bit of housekeeping. Thanks to Mark, our new member of the team, we're able to record more interviews and bring you more content. So next week we have Doomberg, the energy expert. We've got Christine Guerrero. She's an oil and gas expert. We have the market sniper, Francis Hunt. He is a technical analyst like myself, and also Michael Oliver of Momentum Structural Analysis. So be sure to get your questions in under the community tab for those guests for next week. The missus and I will also be going out to Vancouver in January for the Metals Investment Forum and the Vancouver Resource Investment Conference. So if you're out there as well, be sure to say hi. I look forward to meeting you. Both events are free, and I'll be doing a bunch of interviews of speakers out there and of the companies that have their booths up. I also got a lot of questions about the companies that I've interviewed in the last month or so. I didn't take any money from those companies. There's no sponsorship. I was just doing the interviews for free. I'm basically taking what Rick taught us about how to interrogate a company, and I'm practicing. So any of the companies at this next conference that I see that have some potential, I'll be interviewing them and running through the same format that I did in the other ones. You know, there's no compensation or anything. I've only ever taken compensation once, and it was, I think, over a year ago, and it was from Silver Elephant Mining, and I've never taken anything since. So, housekeeping out of the way, let's go to the charts. Starting out, as always, with the S&P 500. Okay, so we did get a little tiny bit of a rollover here. Okay, so it finally happened. And it is down 0.6% for the week. Bias for next week is slightly down, just a little bit maybe here to the 20 moving average. And I don't know, I'd say 50-50 that holds and that moves down. But I definitely see it curving down Monday, Tuesday next week. And the dollar is up 0.9% for the week, so it bounced. Thought it might continue angling down, but it didn't. That reversal bar on Friday just absolutely played out, getting up towards the upper end of this box. So there's quite a bit of resistance around where it is now, 107 or so. So bias for next week is down. However, we do have the Fed, and they are having their meeting next week, and 95% of traders believe that they will be cutting another 25 basis points. So that's interesting. The dollar will get slightly weaker in that aspect, which would, kind of support our thesis of this going down. But, other currencies are getting weaker at a faster rate, so pick your poison there. Some of this may be priced into, but I think it's going down next week. All right, and the 10-year yield on basically the benchmark for money is at 4.4%. And the 10-year yield minus the 2-year yield is still just maintaining above that zero line right there. So we are just keeping slightly out of clown world and into normal times. This actually is kind of looking like a bull flag here now that I'm drawing this, or looking at it, I should say. Now I'm drawing it. Okay, that kind of looks like a bull flag there, doesn't it? So doesn't it look like we're going to have a little breakout to the upside? And what happens when this chart does this? We get a recession. The 1-month Treasury. Okay, now we are consistently below 4.5%. It changed about 2.8% to the downside last week. We're probably not going to see 4.5% interest rates again in a very long time. See, the Fed's kind of caught in between a rock and a hard spot here. If they raise interest rates, the debt becomes even more unsustainable than it is already. So I think this is going to continue edging down. VGIT, these are basically 10-year treasuries. I think if we do get a correction back down to here, although I don't think we'll see it, I think generally this chart is going to keep, I think that was the bottom there, and this chart is going to keep stair-stepping its way up. And gold is up 0.6% for the week, so it's pretty volatile. We had a nice little spike up here. There was some news on China possibly doing stimulus, and then that seemed like that was a nothing burger. But did have a little bit of correction here. Last week I said bias was sideways to up, and I think this week it's probably going to be sideways to down. Going forward, I think we're going to get a little bit bigger of a correction here in gold. You know, we had 9% here from the top to the bottom, and that's not enough in my opinion. When we go back over past recessions that have happened, I plotted them here, and oh, not on this chart. Sorry, it was on a different one. But I don't think 9% is enough. Like, maybe if we'd hit like, 15% or so, I'd say like, okay, that could be in. But if it's only 9%, then that means that I drew these pretty green support lines here for nothing, and I just refuse to admit that. All right, gold divided by the S&P 500, we're at 0.44. We need to get to 0.5, then we'll be off to the races. And CEF, physical gold and silver, is down 0.5% for the week. I don't see any buys here. We want to see the RSI get pretty low and sold off here. If you don't have anything in this, I'd say first limit order here is at 23.60, and then the nice little spot back here is down at 21.75. But we're going to need gold and silver to really correct for it to get down to those levels. PHYS, same kind of thing. This one is up 0.7%. So gold itself is up 0.6. This one's up 0.7. Don't see any buys or sells. Same. I drew these yellow lines right here to kind of coincide with the lines that I drew on gold. And GDX, this one's a little exciting, down 0.4% for the week. So we're talking about it waiting to come back and hit the 200-day moving average right here. And we're right about on that. So we've got it on this first line right here. It was drawn at 36.84. And then another one where we got it back here was at around 35.20. The one thing that I'm a little concerned here is maybe you already see it, but this kind of looks like a little bit of a bear flag forming here. So usually when you get a pattern like this, it kind of breaks to the downside. So I'm a little torn on this one. I mean, if that is a bear flag, it's probably dropping down. If it's not, then it's probably going to bounce off of that 200 moving average and move to the way up. So I'm not sure. I'm a little 50-50 on this one. But if you don't have anything in GDX, I think this is a good starter position right here. And GDXJ down 0.6%. Also kind of a similar pattern here. So is hitting on this relatively strong upward channel trend line, right? We can all see this, both these trend lines here, and it's just starting to hit on it. It's still a little ways away up from the 200 moving average, so I'd rather see it come out of this channel and hit that to bounce up. But, also the same kind of pattern. You guys can see that there's still like a bearish flag right there, just like in GDX. And Franco Nevada is down 1% for the week. So this one's pretty much fairly valued now. I like limit orders down here at 115. That would just, line up with a lot of back support right back there. And Wheaton Precious Metals down 1.3% for the week. Possibly coming in here for a double bottom. Ideally, if I could write the future, what I would do is I would have this come down to this support line right here at $58 at the same moment that this rising 200-day moving average is coming up with increasing volume, and then I would put my order right there. Right there, yeah. And Gold Royalty Corporation, this one is up 2.5% for the week. So this is a good deal now. If you don't have anything in this company and you want something, now is the time. I'm getting what's called cute right here, as I have so much of this company. I think this might be over 2% of my portfolio now. And not of the gold portfolio, of the total portfolio. So I got plenty of this. I'm just getting cute here, and I put a limit order in for 118. And all that is back here in October of 2023, it hit 118. And then again here in August of 2024, it hit 118. And then it hit 117 here in September of this year. So that's all I'm doing. I think I'm basically amusing myself here. These guys are going to start cash flowing here pronto. And I don't think we'll see these levels again. Origin Royalties is down 6.6% for the week. So we had a nice little technical double bottom here on a rising 200-day moving average and increasing volume into the week. Dropped down a little bit there on Thursday and Friday, but looking really good. And on top of that, it looks like we're going to get a resolution here pretty soon in Altius. So, yeah, once we get that, I think this is going to re-rate pretty quickly, like overnight. And, this may be one of our last chances to buy this thing sub $1. So I picked it up at 93 cents. And Empress Royalty down 1% for the week. Nothing new here. Just got one limit order in for 24 cents and then another one down in here, basically a stink bid for 20 cents. Super small market cap company. Limit orders only on most of these that we're talking about, but especially this one. And Barrick Gold, I think it was exactly flat for the week. 1675 looks like a pretty picture perfect double bottom right here. Actually, that'd be a triple bottom with the action on last Friday. We did have an arrest warrant issued for Mark Bristow, the CEO of this company. Basically, I was talking to Rick about this, and basically he says he likes jurisdictions like Mali better than places like Canada and the United States, because you really know who it is that you're dealing with, and they'll just tell you straight up, I want 50% of everything that comes out of the ground. There's no ifs, ands, or buts about it. If you want to operate here, that's what it is. And you can negotiate directly with the person. Whereas instead, going through politics and, cloak and dagger stuff in some of the first world countries, this one, you get to know exactly what the price is. So I think it's pretty incredible that the CEO could get an arrest warrant issued on him. And that's basically telling him to come to the table and make a deal. All right, and I'm sure he will. It'll probably be for half. Newmont down 2.2% for the week. So kind of similar double bottom here in a lot of these gold equities. These guys are doing just like Rick said they would. They're selling off their tier 2 assets, and they are consolidating the company, making it smaller and more focused. Agnico Eagle is up 0.2% for the week. So we're free in this one. We're past the point of concern. And you know what I like about this? We kind of locked in these dividends. They pay 40 cents a share here every 3 months, but we locked them in like you guys did down here when it was $45. So our percentage that we're getting on our dividend is north of 3.5%. If you're getting them up here, it's a lot less than that, right? Like 1.75. So if I could see the future, I would have this turn out to be a cup and handle pattern, and then we would back up the truck right here at $68. We'll see if it complies. B2 Gold is up 0.4% for the week. So still got the option on this one that doesn't expire for over a year. But if I wanted to get some if I wanted to get some straight up shares, I think now is a fantastic time. It's coming right up on this support right at 260. The limit order that we've been talking about forever is $2.50. I know a lot of you got it at that. That might be another level. And then the stink bid down here at $2.35. And let's see, Equinox Gold is down. Where is it? Down 2.6% for the week. So super volatile here. I think this is basically just people trying to figure out what the greenstone mine is worth. That's what that price action is. I mean, we had a heck of a run right here on Wednesday. I almost turned this into a trade and just sold here. And of course, now that I can see what happened, I'm regretting that decision, but whatever. We're down here around the 200 moving average. I think now is a pretty good time to get some, or if you really want to wait on the deal, I think it will approach this white line again. And if we can make something happen, we'd line it right up with this green support line, and that's where we'd make the purchase at around $5.25. G Mining Ventures down 2.2% for the week. First level of 775 hit. Now, next level of support is going to be down here around $7.25, $7.20. And then after that, you're going to want to catch this rising 200-day moving average. And after that, $6 is your stink bid. Rio 2 is down 1.1% for the week. So we had our 46-cent limit order hit there. Gold's gotten hit a little bit. This has come down as well. I think we're going to get a little bit more weakness in this, and hoping, fingers crossed, that our 38-cent limit order gets hit. Nothing to say that it will, but a girl can dream. Silver is down 1.8% for the week. So pretty volatile, shot up, then came right back down. Bias for next week is going to be down. That's a pretty bearish looking two candles right there. First level of support is going to be right here at $30. And what I love about this, remember how we were saying forever that 26 has to hold. That's the key level, 26. I think now it's getting up closer here. Like as we get this rising 200-day moving average, that is a big level of support for us to hold right there. So I think the next real level that we got to hold is 30, and then after that 28, and then after that 26. So looking pretty good on silver, although I think we're going to have a little weakness going into the end of the year. Gold to silver ratio, gold outperformed by 2.4%. Ratio is now 86 to 1. I think last week it was 84 to 1. PSLV down 1.7% for the week. Yeah, okay. If silver goes down, this one's going to go down too. But if you have no position in stock market silver, now I think is a good time to start right here. Get your limit order in there on Monday, and then the next bid down will be $9.50. SIL down 5.5% on the week. Wait till this one gets hit at 35, and then 31.50 will be your limit order after that. And SILJ, the junior silver miner ETF, is down 0.8% for the week. So just holding right here on this rising 200-day moving average, we got increasing volume. This is looking really good. If I didn't have this position right here, I would have bought on Friday. And Pan American Silver up 0.2% for the week. So we're talking about a possible head and shoulder pattern. I think it was week before last. This one, I'm starting to question that. See how we got kind of like two shoulders right here? It almost is looking like we might have a bit of a bear flag here. I'm not really sure. But if silver gets hit, this one's going to get hit regardless of what pattern we see on this thing. And Hecla Mining. Okay, you guys will remember this one from before. This one's down 2.2% for the week. So did another call option here. Possible other bear flag here. If the bear flag gets extended, this is going to, run up to the top of it, in which case we will exit this option right here. We will exit right around there. But hopefully it repeats that and the bear flag doesn't play out on Monday. Hopefully it plays out a couple of weeks from now and we get one more Charlie Brown shirt pattern spike up there. And Endeavor Silver down 4.6% for the week. So broke our first line here of $4. So you guys remember that was the first entry point right here for people that had nothing in this. That was it. It hit on Friday. Congratulations, you're in. Your next one is going to be on this rising 200-day moving average, and then after that, $3. And copper, paging Dr. Copper, flat for the week. Bias for this week is going to be, I wrote sideways to up, but now that I'm looking at this, I'm kind of thinking it might be going down more than up here. Got a death cross here and the 50. A lot of it depends right here on the RSI. So see how this is angling down. If we can get this to break through this 14 moving average on the RSI, then it's definitely going down. So I'm actually kind of thinking copper's going to go down next week. I'll go with the sideways and down. All right, and COP.U. So this is the Sprott Physical Copper Trust. We've been talking about this one for a while. Down another 7.6% this week. So we're up to I think, what is it now? I'm just looking it up right now on the fly. Almost 21% discount right here. So pretty impressive. Yeah, that's pretty awesome. Okay, so I got a limit order in here for $6.65, which is pretty much where it closed there on today, Friday. Now it says 440 shares took place, so maybe I had a partial order hit. I don't know. That could be me as a partial order. But anyways, I'm getting more as it's going down. Robert basically says physical copper trust, I'm thinking, might be better than miners due to geographic risks and stakes, possible recession coming. Can be waiting a long time with monetary easing. What we do know is that copper will be in demand. Thank you for bringing up the Copper Trust, and I want to thank Blaine because he's the one that pointed us up onto it. And Robert, thank you for the donation, sir. You're a gentleman and a scholar. And Jake says, he did show a physical uranium trust. I forget which ticker it was, but it wasn't Sprott. It was the Yellow Cake PLC physical trust there, Jake. And for some reason that wasn't explained, it tends to pretty much always stay at a discount. You're right, it does. Now, without fully understanding that, it's the only thing that makes me nervous about this physical copper trust. Steve, do you have any insights? No, I don't. I do not. But the way I look at this is essentially what we're doing right now is copper is trading, we'll call it $4.20, the same as it was last week. But we can buy this at more than a 20% discount, which puts this at, what is it, like $3.35, something like that. I think it was a 21% discount. Oh yeah, I drew the yellow line for it right there. That's right. Okay, so $3.35 is basically what we're buying this for. So do we think that copper, when it gets hit by a recession, because it almost always does, right? Do we think it's going to drop more than $3.35? I don't know. But if I can get $4.20 worth of copper today for $3.35, I'm going to take it. And if it goes down even more and this discount persists, then I'll be buying it to $2.50 or whatever the math works out to. So I really don't know if this is going to play out like the Yellow Cake one. If it does, then this is stupid. We should not be doing this. But if it plays out like the Sprott Physical Uranium Trust, where you get these moments of like pretty radical discounts, and then it goes back up to, NAV or at a premium, then this is going to be amazing. But, that's the gamble, makes a market. I have no idea which way it's going to go, but I'm betting literally that it's going to go up. All right, COPX is down 2.5% for the week. So we're finally lining up with some of these limit orders that we've set forever. And 42 is hit. Congratulations, you're in. Next one is going to be 39. I won't be getting any more of this until we get down into here into like the low 30s. If we do, I think we will, with this coming recession. I think it's going to happen. I really do. But these are your entry levels, maybe 10% here, 30% there, and then 60% down here, something like that. That's how I would set it up if I didn't have any already. COPJ down 12.4% for the week. So they had to do some selling here. They just had a dividend pay. COPX did not, but they must have one coming up here soon. So we might get a correction in that as well. COPJ, massive correction right here. Finally had our limit order that we had set forever. I think we set this one back here and then just had to wait for months, and it finally happened. $19.50, I think, was the limit order, although I adjusted it in the moment. I got it at $19.58, and then this one I got today at $18.84. So set another limit order back in here for $17.35, just lining up with some back support back here. This will be a very leveraged bet on copper, the juniors, and ETF in them. All right, and Freeport is down 1.1% for the week. So if you wanted this company, first limit order hit right there at around 42. Next limit order that I see that would be prudent is around $40. And Arizona Metals down 0.8% for the week. So you see finally some upside down arrows here. I am taking this one for tax loss selling. I'll decide in 31 days what I'm going to do. The one thing that really kept pulling at me on this one is they won't get back to me and do an interview. And I don't get it. It's free publicity. You're talking to an audience, which I've expressed to them, that is very interested in this company. They're worth, $140 million, and I can't get the guy on the phone. Other similar sized companies, Gold Royalty Corporation, Origin Royalties, Uranium Royalty Corporation, Centaurus Metals, Rudy Frank and his company is worth 10 times what this one is. They all answer their cell phone when I call, and this company don't, and they won't answer my questions. They won't take a call. I don't get it, but that makes me nervous. And so I got 31 days to decide what I want to do. And in the meantime, mercifully, I had a lot of gains this year. And so this tax loss selling will come into play for that. All right. Monduro Capital is up 2.2% for the week. So if you want a limit, or if you want a piece of this company, I put last week a limit order for 13 cents, anywhere around now. Limit orders only. This company's only worth like 13 or 14 million. So super small market cap. I lifted up the limit order from 9 cents up to 12 here. So we'll see if it hits. Let's see. Uranium is exactly flat for the week. Bias for next week is up. Okay, I moved this. I moved our little white trend line up here at $80. I moved it down to $76.40. After talking with Justin, make sure you check out our interview with Justin Hune from last week. Basically, term contracting is in the mid to low 80s. So this is just very, very few traders trading this thing, right? So very small volumes going on right here, right? And the Sprott Physical Uranium Trust is down 4.6% this week. We are at 66.2 million pounds, trading around a 5% discount, although I think this may actually be a pretty good entry point on this, even though it's not our kindergarten method of like 12 or 15% discount. And the reason is, for one, we got this upward channel trend line, but more importantly than that, if we go here, like in the last, how long has that been? Over a year, this is the lowest it's been, and we got a little double bottom here. I think that this is probably the floor. We've been saying $80 is the floor. I think 76 is the floor. And if that's the case, then this is going to be a steal right here for the Sprott Physical Uranium Trust. Alrighty, and Cameco is down 11.1% for the week. So it had a nice little waterfall sell-off. We were saying last week we got all these high technicals, and finally played out. I don't know that had so much to do with Cameco as it did with the rebalancing of URNM, which Justin and I talked about. So we almost ran a put on this. And by the time we woke up to what was happening, it was this day. Where was it? Tuesday. So Monday had the waterfall sell-off. Then we're on Tuesday, and we're like, do we do a put on this? I don't know. It looks like most of this is already played out, and the puts were a little more expensive than we wanted. We could tell that they were going to sell more Cameco just because they can't hold more than 15% of one company, and they had 18% of it. But then when we did the math, we didn't think it would affect the share price that much. It looked like if we got a short duration one, we would have made a pretty good profit there. But anyhow, I'm rambling, and hindsight's 2020. So some of these are coming from rebalancing within the ETF. Kazatomprom is down 6% for the week. That can't be right. That must be 0.6. No, 6% for the week. Okay, Kazatomprom is down 6% for the week. It's kind of trading in the lower-ish end of this box. I'd be interested in getting it down here if I was going to buy this. I'm not buying anymore. It's too risky for me. But, kind of on the lower end of this, $37, $36, somewhere in that range. URNM down 9.4% for the week. So just had this dividend pay, pretty sweet dividend. So they had to sell some shares to pay for that. And so it rebalanced some of the companies. Had a nice little sell-off there. And what's kind of interesting on this one, okay, if we run the last run up and then the retracement, so I'm going to put it right there, up to there. It's hitting perfectly right now on the 61.8% retracement. Now, I would prefer to wait for some kind of double bottoming action right here, maybe a little bit more on the RSI. It's at 34. But something to keep in mind here for URNM and URNJ down 10%, and we got the same Fibonacci retracement. So 61.8 hit perfectly on there. I'd like to wait for a little double bottom. We also had dividends here, pay Thursday for URNJ. So pretty sweet little timing right there. If you have no position in uranium, I would be buying both of these on Monday. But, we've been in these things for years, so we're not looking to catch any little tiny thing like that. But yeah, pretty interesting retracement. I would ideally like to wait for a little double bottom, and then I'll probably end up buying more if that happens. URNJ divided by Cameco, Kazatomprom, and the Sprott Physical Uranium Trust. Look at this. We are just on this perfect double bottom. Now, not that these ratio charts have to mean anything, but it is kind of compelling, right? Perfect little double bottom right there. URNJ kind of down in the toilet, right? And getting a lot of sell-off action. You know, like I said, if you have no position, I think now is a pretty decent time. Uranium Royalty Corporation down 8.6% for the week. So I drew the fib retracement here. It blew through a little bit of that and even closed on one of the days below it. So I'm not sure how accurate that is, but basically coming up on a little double bottom here. I think the idiot-proof way of just having, see, we've got a little gap back here that might get filled. $2.25 limit order, and then a stink bid down here at 190. If it gets down to 190, I will be buying more. And Uranium Energy Corporation is down 7.6% for the week. Still think it's a great time to move past the point of concern. You guys have had a double here since you were tweeting about it and everything when it was back down here around $4. So good on you. You know, move past the point of concern. We've got a nice little golden cross here that's paid out. Yeah, looking fantastic. If you want to hear more about companies like this one, then join us in the Rule Classroom. Rick turned us on to this one years ago, and look at how well it's done. We now own it for free. We're past the point of concern. The Rule Classroom is free with loads of content. Rick is doing another Q&A this coming Thursday, December 19th, with Robert Quartermain, who is serially successful in mind building. And December 26th, the day after Christmas, we will be doing streaming. We'll be streaming for hours, taking your questions. Sign up for free with the link down in the pinned comment below. And after that, if you're a serious investor, join us in the Rule Classroom Plus, where you get a much more personalized experience. We just had a Q&A with Rick. And this coming week, we have Joe Mazumdar. The Rule Classroom is $29 per month. When you think about how much you're betting on these companies, that is basically free. Price is going up soon, so lock in your price and be grandfathered in before it does. Links are in the pinned comment below. I will see you there. And oil. WTI is up 6.1% for the week, and Brent is up 0.5% for the week. So I really think that we may be coming to a point where we're going to be breaking down here in oil. What's interesting about this is the spot price of both of these is up, but the equities are all down for the week. So kind of interesting. But not a whole lot of support here on $67, although it's hit quite a few times. I could really see it breaking down and getting down into the mid-50s. You know, maybe at least $60, I think, would be kind of a minimum. Okay, gold divided by crude oil now takes 37.5 barrels of oil to give you 1 ounce of gold. Last week it was 39. So gold outperformed, oil outperformed gold. And our favorite oil ETF, XLE, is down 2% for the week. So we have a nice little waterfall sell-off. This gap is filled. I think first level of support for anyone that is looking to get into this would be around $87, $88. That'll catch this 400 moving average. And also this support line that dates back quite a while. ExxonMobil down 2.4% for the week. Getting sold off here. Maybe this is anticipation of the recession. For newbies and first guys coming in, I would buy now, and then I would also buy again at 109. I like the 109 level quite a bit. The last 2 times we bought there, it hasn't passed it, although it wouldn't surprise me if this time it does. I think that'll kind of be our first entry point. And then after that, probably 105, and then getting back down in here. But this one pays a great dividend. It's in a commodity that is likely to do very well. Will get hit with a recession, but these guys are profitable at around $55 a barrel. And Chevron is down 0.9% for the week. So got super stretched up here. I think I called it super sauced. and started to have a little sell-off here. Got down to the 200 moving average and the 50 moving average. Went through both of those. It's going to hang around here for a little bit, I think, but I think it's more likely to come back down here to the 148 level, which would make for a really nice limit order. And Occidental, Warren Buffett's favorite, is up 0.2% for the week. So move the support line right here just a bit down to $43. We'll see if that hits. Blackstone Minerals down 1% for the week. We've got, let's see, limit orders at $14.75 to $14. So basically, anywhere in between these two lines, I think is fantastic. Like, let's say you just bought it at the price it is right now, which is $14.54. I did the math, and assuming the dividend stayed the same, you're getting a 10.3% dividend. Okay, so for every $1,000 you have in this every year, you're getting $103. Pretty cool. All right, and Freehold Royalties is down 4.25% for the week. So this one has a fantastic dividend, just like Blackstone. At this price point right here, this $13 level, you're getting an 8.3% dividend. So I know a lot of you have been patient with this one, saying that you're not going to take the 8%, you're going to back up the truck when it hits the 8.3. Well, it just did. So this thing trades millions of shares a day, so you should have been able to get in, well, not millions every day, but it certainly did once it got down here. And your order should have filled at $13. Natural gas is, where are we? Up 6.6% for the week. Bias for next week is going to be down. Was caught here by the 20 moving average. We'll see if that actually holds. I think it's probably going to push through that. I honestly think we've seen our lows in oil. When we got down here to like $1.50 and had that nice little triple bottom right there, I think that was the lows. I don't think we're going to see that again. I think we'll get slowly higher highs and higher lows as we go forward in natural gas. Got some listener comments here. Jake says, I don't always watch live, but I always watch. Thank you, Jake. Kevin says, appreciate your guidance. O2 says, excellent show. Thank you. And Tim says, you are good at what you do. Thank you. No, Tim. Thank you. Thank you, guys. I appreciate that. I really do. It's good to get some positive reinforcement. All right. Speaking of positive, Devon down another 3.2% for the week. So we are either going to look like an absolute idiot here. We are either compounding the error, or this is going to be like Agnico Eagle was a year ago, and this is going to be amazing. So we'll see. I'm buying more on the way down. They haven't cut their dividend, but they've stopped the special dividend. But what they're doing with that money is they're buying back shares. So each share that exists is actually becoming more valuable. I think this is a great buy. You know, I hope so. I'm doing it in client accounts. I think we got a winner here. I really do. I think we have to be patient. I think it's going to take a few years for this to really play out. You know, coming in a recession, this might get hit even more. But man, I think this is going to be fantastic when regulations start getting lifted on North American natural gas. Man, I think these are going to do really, really well. But, you know, time will tell. We'll see. We shall see. Woodside Energy. This may be one of the ones I might be getting out of. I follow Devon, Birchcliff, and Pato a lot more than I do Woodside. And I don't have a whole lot of Woodside compared to the others. So I may be consolidating a little bit. I might be taking some tax loss selling. I'm not sure. When I look on the charts here, I think like, okay, 18 looks like a pretty easy comeback to line right here, but we'll see if this breaks down or not. It's kind of looking like the chart is going to be breaking down. If you want some Woodside, I think now is a decent time to buy. And then again, down here, at least as far as the charts, again, around $14. Birchcliff. Okay, we just got some more Birchcliff. So I did the math on this. And this is what your dividend is. If you bought it at $3.55, comes out to 8.2%. We got it even cheaper here on Friday, got in at $3.40, And the next little line that kind of went into the weeds back here was $3.25 for another limit order. And Paydo is down 0.3% for the week. So, maybe if you don't have any first bid right here, right along this rising 200-day moving average, I have my next limit orders in here for $10.65 and $9.75. And coal. Thermal coal is down 1.3% for the week, closed the week at 130. And met coal is basically flat for the week, and it closed the week at 205. Our favorite coal ETF, COAL, is down 0.3% for the week. We're now at 10.8 million assets under management and 470,000 shares. So if you want your first order into this, I like this one right here, $22, and we'll call it $22.30. And then stink bid down in here for $20. And then if you really want to get a stink bid, then you can get one down here, kind of at that cheapest point down right there at $19.20. Glencore down 2.3% for the week. So our limit order for $9.40 finally hit. It closed even lower than that, $9.30. But I really like this order a lot because it just lines up with a whole bunch of support going back quite a ways of $9.40, and it finally hit on Friday. AMR up 1.8% for the week. So we might have a little upward channel trend line. We'll see if this gets obeyed or not. Right now it's obeying the 50-day moving average. Still got our stink bid down in here. That's probably become a pipe dream at 186. And BTU down 1.7% for the week. We are almost there, boys and girls. Just waiting on the green light to take another option on this thing and, rinse and repeat the BTU money hack. I love this software. I would not have any idea of when to do this. Let me show you how I do this. So I start out with the 3-month time frame, basically the quarterly, right? Take in the chart, just look at volumes, kind of look at everything, right? Then I go to the monthly here. Same kind of thing, just looking at the pattern of the chart, looking at the volumes here. Then I go to the weekly. Now I'm starting to pay attention to RSI, MACD, looking at volumes, looking at price action, right? What's the RSI here? 42. Now I go to the daily. What's the RSI on the daily? Ooh, it's 30, right? Okay, now we're getting kind of low. Okay, how's this look on back support back here? Look at that MACD way down there, but just starting to rise up, right? Now I go to the hourly. Okay, now I'm looking at, this is starting to flatten out. We don't have this waterfall sell-off that was just getting lower by the minute down here anymore. It looks like it might be putting in a bit of a bottoming pattern. Where's the RSI on that? It's starting to angle up. Now I go to the 30-minute, okay? Same kind of thing. RSI right here. Take a look at this, okay? Lower to higher. Now this is 30-minute. Each bar is 30 minutes, right? But, looking interesting. Like it might be putting in kind of a bottoming pattern. So this is kind of where I start to get interested, and maybe I'll start talking about taking a call option out on this, and I could not do it without this software. So if you want to try out this software for free, there's a link in the pinned comment below. When you try it out for free, you're not going to get all these cool indicators and stuff that we have right now. But, if you're getting started in technical analysis, this is where you do it. And, you can't beat the price of free. So thank you in advance for using that link. It supports my family and my work. So thank you for doing so. And platinum is down 1% for the week. Oh, let's go back to the daily here. There we go. Down 1% for the week. So hit right through our first support line right here. So looking great. Looking like it's going to go down next week. I think it'll go down. PPLT, this is the easiest way to bet on it in the stock market. That one hit through the first level there. So your limit order for 85 hit. Next stop, 80. So that's going to be your stink bid there. Maybe you get a little 10 or 20% position here, and then you fire another like 40 or 50% down here at 80. I like that level a lot. And Palladium is down 0.4% for the week. Bias for next week is going to be down. Same kind of thing. Maybe looking at like the $900 level. I think anywhere like south of 960 for Palladium is pretty good. And PALL first level here is going to be $85 on this ETF, and then down here again at $80. As Triple P, Sprott's Physical, Platinum, and Palladium Trust, just a one-stop shop for both of them. I mean, if you don't have any right now, I think this is a fine time. And then the next level I like here is $9, and then $8.75, and then a stink bid in at $8.20. I'm sorry, $8.25. Platinum divided by gold, historically cheap. You can trade one gold coin and get 3 platinum coins, or you could trade one platinum coin and get 30 silver coins, or vice versa. So very cheap in comparison to those two metals. Just because the ratio is way skewed doesn't mean it has to reverse, but I think it will. I'm literally betting on it. And nickel futures down 1.3% for the week. Bias for next week is going to be up. Just hit this level many, many times, this 15,500 or so level. Hit it many, many times, hitting it again. Maybe this is going to be like oil, where it's just hit this level so many times it's going to break through. I get a little nervous the more it does this. I'd rather just see it kind of rebound. We'll see. But I did place a bet today. Cheapest one I've gotten yet on NIKL, and it's because the dividend came in, so it sold off a little bit. And got a purchase here at $11.41. Centaurus Metals is, I think it was exactly flat for the week. Let's see. Yep. Excuse me, exactly flat for the week. 26 cents. I don't see any real buys here. I mean, if you don't have anything in this and you really like their deposit down in Brazil, then, a limit order now, or another one down here at 21 cents. And iron ore is up 1.1% for the week. Bias for next week is sideways to down. BHP is up 0.5% for the week. There was a lot of hype over the stimulus, the China stimulus, and then kind of a nothing burger. So it just shot up that one day, and then that would have been an amazing option. No matter what it cost, it would have been worth it. I remember looking at it, I'm like, that's way too expensive. And then I'm all, no. Anyways, came back down. If you want some long-term of BHP, I think now is a great time to do it. I've had these guys for years. They just pay. Like them a lot. Anyways, now I think is a decent time to buy. I might take a look at these options again if it gets down to the $51 range. And Rio Tinto, you want to position in this, I think the $60 mark is the way to do it. 60, $61, somewhere around there. They are up 0.2% for the week. And our favorite ETF to just capture them all, the PIC ETF, had a nice little waterfall sell-off here. So if you had a limit order in for 38.50 around this yellow line, it hit. Congratulations, you're in. Next level, and one that I'll probably be getting in, if not me for clients, is down here at the 36.25. Looks pretty good, and that would come in for a nice little, I guess that would be a quadruple bottom if we can count back there over a year. Nutrien is up 0.5% for the week, so fertilizer, where'd it go? There we are. So just hovering right around this 50-day moving average. I like a limit order down here for $45. And Bitcoin is basically flat for the week, although pretty volatile. Fell down into the 94,000 range and then popped right back up above 100K. So we've been talking about this cup and handle and everything for a while. I think this is probably going to be moving up to the 106, 108 range before we have another correction, and it'll probably come back down here into the mid 75 range. Alrighty, well, I hope you guys got something out of that. Thanks for being here each and every week. Love getting your emails, love reading your comments. We're going to be opening up a MailChimp account, so if you want to get settled up on the newsletter, be sure to send me an email, and then we will add you to the list. Thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.